Good evening, guys. It's Saturday, October 7th. My name is Dave Coker, and this is Talking About Finance. And welcome, welcome, welcome. Welcome all. Welcome all people who are looking for the simple approach, the best approach, the low-risk approach to building wealth. While far too many suggest trading, speaking as someone who has traded professionally, I can tell you this. They do not know what they're talking about. And most often, they will ask you to pay for their wisdoms, their advice, their idiotic suggestions. You don't need people like that filling your head with nonsense. Let's pause for a second. What's the time-honored way to build wealth? How have people from history immemorial gotten rich? Yes, you know, we see the universal trait of wealthy people is property. But we're going to generalize that a little. You need assets that generate cash flow. It's that simple. So property is ideal, but it has high capital costs. So what we can do is this. We can take a look at dividend-paying stocks. If you own these shares, you get paid to hold them. You can use the monthly cash flow to buy additional shares of dividend-paying stocks. This also works for high-yield bonds. Both asset classes will generate monthly income, which is reinvested. The power of compounding working for you. And when your dividend payments get high enough, then you can start to think about acquiring property, an asset that will pay you to own it. This is how people from time forever have gotten rich. It's how I built my portfolio and regained my my financial independence. I didn't trade. That's complete rubbish. Almost all those self-described traders on the internet have no relevant education. They have no professional qualifications. In fact, many hide behind screen names. It's ridiculous. All you have is the word of someone hiding behind a screen name that they're professional traders and they will help you make money. It's rubbish. I've only met a few people on the internet who admitted to losing money. Most tell you they never lose money, and for a small sum, they'll help you too. It's total garbage. But we're here to talk about finance, not the sins of the many. So let's go. It was another interesting week for the S&P 500. It finished up about 48 basis points, but boy howdy was it a volatile session, especially after the non-farms payroll numbers came out Friday. Only 3 sectors moved up on the week. The remaining 8 sectors all finished down for the week, with energy finishing dead last, booking a loss of 5.16%. Curiously, we see both staples and utilities booking losses. It's very odd, as these are not discretionary. In other words, people need products and services offered in these sectors. They need them to live. So it's not clear to me why those sectors dropped. I haven't been able a chance to look into them yet. And as I've been warning, watch out for October. August and September were bad enough. So will Mr. Market deliver a third and final blow in October? And I don't get engaged the markets like this, but several of my buddies are going long S&P 500 puts. Deep out of the money. So cheap. Let's see what happens there. The VIX traded up to 17.45, opened the week at 17.52. It printed 19.78 on Wednesday. So watch out. It was a very volatile week, had its ups and downs, and that might ripple into next week. The markets are closed in the States on Monday. Who knows what will happen? The 10-year note closed the week at 4.79%, up 0.2% on the week, up 0.9% year to date. And my gosh, the 10-year approaching 5%. We haven't seen this for decades. What a viable alternative to stocks. Put your money away for 10 years and grab almost 5% risk-free? Yeah, why worry? Oil closed the week at 82.72. It's down about 8.9% on the week, but still up about 3.1% year to date. We're still expecting $100 a barrel oil sooner rather than later. And since yesterday was Friday, you know what I did. Yes, I bought myself some Bitcoin. as I do every week and as I've been doing every week since 2014. I call it an act of self-love. Don't ask me why I do it. I just have to buy. And so do you. Buy Bitcoin and never sell. So let's find out what me and my buddies, some 50 or so finance professionals from all around the planet, talked about last week on a private Telegram channel. And once again, I must properly introduce us. We are Global Wall Street. And between Telegram and our personal networks on LinkedIn and WhatsApp, we know everyone, absolutely everyone, in global finance. We're always startled when we see some banker, hedge fund CEO on telly, and we realize in our group we're just one or perhaps two connections away. Jamie Dimon this week, one connection away from someone in our group. Absolutely incredible. And this week, we're reporting from Tokyo. We're reporting from the city of London. We're in Madrid, we're in Paris, and we're in Shanghai. We have people everywhere, absolutely everywhere that matters. So let's go. 7 slides for 7 days. And I know you've heard this before, but I'll just say it again. I love you guys. Open-minded, and with the same goal I have, to make money in the markets. My gosh, I should be paying you to do this. Take a look at this. This is an interesting one. I published it in a research note about 2 weeks ago, rippled it into Medium. It's on Google News. And I updated it Friday after the market closed. And it's really fascinating when you look at this. Really, really interesting, guys, because what we see here is we see a divergence between the NASDAQ and the 10-year note. Specifically, the price of the 10-year note is falling. Yields rise. And meanwhile, the NASDAQ, sort of going up. What could possibly go wrong? If you look to the left side of this chart, you'll see typically these series move in lockstep. So yeah, the longer they diverge, the wider the divergence, the more chaotic will be the convergence when it happens. I'm not saying when, I'm just simply saying watch out. And this week, of course, we saw a lot of stuff going on in the markets. And Friday, I updated this chart that I do periodically where I look at the probability of changes in the Fed funds rate. Now, November, it ain't changing. 72%, and look for the white. 72.9% of no change. 57.6 in December. 56.7 in January. It's only when March you get to about a coin toss, but even then, it's not totally clear because we're starting to see the chance of a hike in March pick up. And then finally in May, started to drop. And only in June do we see the odds of a drop in interest rates dominate. They become the majority overall. It's a very, very fascinating time, guys, to be in the markets. And really don't worry if you're losing money in the markets. It's okay. Play the long game. I don't have, all my positions aren't making money all the time. Sometimes I have good weeks when they're all making money. Sometimes I have okay weeks when some are making money, some are losing. If you buy and hold over a long enough time frame, odds are your positions, not individual trades that you've done, but your positions will be making money. And if you buy only dividend-paying stocks, then oh yeah, you don't really care if you've got an unrealized capital loss because your gains from dividends may totally stomp. And that's exactly what happens with my portfolio. I've got some stocks I'm down about 40%. Capital loss, unrealized. But when we look at the dividends, it's absolutely incredible how much I pulled out of that position. So I don't care. Still, never get emotional about the markets. Never get emotional about losing money. Never get emotional about making money. And I've talked enough about that in the past. You know what the tool is. It's called a spreadsheet. And if you're trying to buy and sell in the markets or even just invest without a spreadsheet, you're a loser. You're going to be losing money. Take advantage of these tools so you can make money. And this is a really fascinating one. Now, there was an article in the Wall Street Journal this week about how financial planners are dying out. Why are they dying out? Well, first of all, most of them charge lots of money. Their results don't warrant. Their performance does not warrant the fee. And when you could take a look at the short end of the yield curve, 3 months, 6-month T-bills making almost 6%. When you look at the 10-year yielding almost 5%, what do you need some overpriced suited guy to tell you what to invest in? And keep in mind, there's always allegations. There's always these scams that whip about. Guess what? Every now and then you hear about them getting kickbacks. Oh, buy this fund. You buy that fund, they get paid. Oh, and you're paying them again for their wisdom. They don't disclose, although they're supposed to, that they're receiving money. Yeah, it's a dirty business. My advice is get educated, buy dividend-paying stocks, buy high-yield bonds. When you have enough capital, roll it into property. Once you get to 3 or 4 rental properties, my gosh. And in any case, we do know that bonds are really what we should be putting our money into now. Keep in mind, guys, with the 30-year closing in at 5%, I had this conversation with somebody recently who opined that nobody was buying bonds, especially a 30-year bond. Well, are you dumb? When I can pick up 4.7% in the 30-year bond, if I've got $1 million in cash at the age of 60, which is not an unreasonable sum for someone that's worked and saved and invested, yeah, take that $1 million, put it into 30-year bond, and you will collect $47,000 every year for the next 30 years. What's the life expectancy of a 60-year-old man? God bless. I would hope it would be 100, but looking at the actuarial tables, I'm not so sure. Oh, and guess what happens in 30 years? You get your $1 million back. People just don't know what they're talking about on the internet sometimes. It's really sort of surprising that people do that and they embarrass themselves. Of course, I'm never rude. I never point out they're talking like idiots. I politely correct and joke around, but I just think, why are you doing this? Because anybody who knows what they're talking about and you're talking about, you come off like a blithering idiot. And why should I believe anything else you say? Bonds, treasury bonds, they're what's real. And guys, I mentioned at the beginning, and I've mentioned this many times. Every week since I started this broadcast, I mentioned I buy Bitcoin every week. Now, there is this existential struggle. Whenever the price spikes, when it was up to 67,000, the question was, should I sell my Bitcoin? Well, the answer was it came in 2 flavors, no in yellow and no in red. You don't want to be selling Bitcoin. Why do you want to sell Bitcoin? Then you're trying to market time and you're trying to trade, and guess what? You're going to lose money without a doubt. Now, once again, we'll close off this evening with a presentation from Plan B. I've got a lot of time for this guy. He's Dutch. Awful lot of time for this guy. He came up with the stock to flow model. And you can see right here when you take a look at the 5-month realized forecast of the stock to flow model. And that's the fuchsia. Is that the color? I have no idea what that color is. Look at the bottom on the legend up on the left-hand side. I think it's fuchsia. I have no idea. I'm not colorblind. I just don't. I do create a lot of art. I would use that color, but don't ask me what it is. I have no idea. In other words, I didn't go to art school. So anyways, look at the 5-month realized price, and then look at the Bitcoin price, which is the red dots. Yeah, and that tracks very well. Furthermore, take a look at the realized cost and the 2-year realized. They track very well what his model's predicting. Guys, we know certain things about Bitcoin. One of the most inviolate things we know is that there will only ever be 21 million Bitcoins, and we know roughly 19.7 Bitcoins have already been minted and they're already held by people. In other words, there soon is likely to be a scramble to buy Bitcoin. You need to get ahead of that mob. Just buy a little bit every week. What I do is I buy Bitcoin every week. It's called dollar cost averaging. I've been doing it for a long, long time. Every week I buy a little Bitcoin. Every week I buy a little more Bitcoin. And then at some point you're startled. Oh, I got that much? Yeah, you got that much. Be kind to yourself, guys. Buy a little bit of Bitcoin. It's relatively low risk. It's nothing like what it was back in 2014 when I first started buying. In fact, I've actually taken a position out in Ripple because I need a thrill. Right? And it was a cheap thrill. Started buying Ripple at 57 and it traded down to 30 cents. And I just kept buying. Same thing with Bitcoin. I've never sold. Every week I just buy. That's it for this evening, guys. You're going to have a wonderful week. It's going to be totally awesome. you're going to make buckets of money. Take care, guys.